Hey, Steve Saretsky here. As always, Canadian real estate market update with a particular focus on Vancouver. If you get any sort of value or entertainment out of these videos, all I ask is you hit thumbs up and subscribe. Questions, comments, put those below. A little bit of housekeeping before diving into this week's video. I will be in Toronto on October the 2nd. I will be speaking at the Veritas Annual Housing Conference, discussing the Vancouver housing market. I will be on the panel there as well, so very much looking forward to that. Veritas is the one of the leading private research companies on equities. They cover a lot of Canadian banks, etc. So very highly regarded firm, and excited about the opportunity to go and speak at that event. If you want tickets to that, I believe they are selling some, so I'll put a link to that below where you can go and check it out. So feel free to take a look at that. But what I wanted to get into this week's video is basically watching the entire theses of this channel and of everything I've been discussing over the last several years. We saw basically the ECB, European Central Bank, cut rates this past week from negative 0.4% to negative 0.5%. This basically shows that rates are going to continue to compress into zero and further down into negative territory, which again, if you ascribe to this channel and this thesis, is that we are in unprecedented times and that we need to look for alternative assets and value. And what one investment thesis or what your parents did, it's a much different environment today. What we saw, you look at the ECB and cutting rates from negative 0.4 to negative 0.5, as if the problem was rates, as if the problem is, well, rates are too high, we need to cut rates further. Maybe that will drive consumption and pick up economic growth in the Eurozone, as if that negative 10 basis points, bringing them to that, even further in negative territory is suddenly going to reignite and stimulate the economy. These guys are really just pushing on a string, and ultimately monetary policy is almost effectively run its course. We have a little bit of room here in the U.S. and Canada. As you can see, though, you have Donald Trump going out and tweeting that the Fed needs to cut to zero and begin quantitative easing once again. You just seeing his tweets, I think that we get another Fed cut here September 18th, probably another 25 basis points. I again remain surprised that the Bank of Canada has been able to continue to hold off slashing rates, but I think that it's inevitable that they begin to cut rates. But what this ultimately comes down to is, and I can see this dilemma for the Bank of Canada, and it's what William White, former Deputy Governor of the Bank of Canada, describes as the debt trap. And he was recently on a Bloomberg interview discussing the debt trap and what it means. So I'm going to clip to that interview now, and I highly encourage you to watch that.
Derail economic expansion. If you were at a central bank today, how do you balance this need for prudence, for reining in consumer debt, getting business debt thinking differently, getting governments to consider their fiscal responsibilities, with continuing to pump out easy money? This is seems like a very difficult kind of place for banks to be.
Well, it is a very difficult place, and I used to work at the Bank for International Settlements, and we were constantly, even prior to the first crisis, talking about the debt trap. And what the debt trap means is that you encourage so much debt that you can't buy lower interest rates. Right? That you can't leave the interest rates where they are, okay, because it just encourages more debt expansion. We're seeing this in the corporate bond market in spades in recent months. But you can't lower interest rates because there's no place for them to go. And you can't raise interest rates because you then trigger the very debt problems, debt service problems that you're trying to avoid. So as the old joke goes, if I were you, I wouldn't start from here. But that's where we are. It's a very difficult place for the central bankers. And that's why people like Christine Lagarde and others have been increasingly calling for it's time to rethink fiscal.
So as you can see, it's basically essentially monetary policy pushing on a string. And so I think that's what the Bank of Canada is looking at and saying, okay, well, we know what Canadian household debt is the highest in the G7. But if you lower rates, it's going to potentially ignite that even further and create potentially more systemic problems down the road. But at the same time, if you're the Bank of Canada, you also can't hike rates, because not only will that destroy the households based on their household debt servicing ratio, but it also will impact the price of real estate. Real estate, there's home ownership rate in Canada is roughly 69%. So just by hammering up interest rates to try to normalize things, you're going to create that systemic problem that's going to impact basically 69% of the population that owns real estate, immediately impacting their wealth. So these central banks are caught in this debt trap. And so what does this mean? How do we keep things moving from here? Well, I think we're starting to see some of the solutions that are being discussed. Clearly that these things have built up to such levels that what's the alternative? Politicians are so scared of falling real estate prices. We're seeing, this federal election, again, case in point is housing. And we just saw Justin Trudeau come out with more stimulus in the fact that he says, well, if we get reelected, what we're going to do is we're going to take that first-time home buyers incentive program, which was just launched and released, that initially had capped out at $500,000 max purchase price. They're saying, well, if you live in Vancouver, Victoria, or Toronto, we'll increase that limit to $800,000. We'll use basically taxpayer money to help you first-time buyers purchase a home upwards of $800,000. Now, the first problem is that house prices for the entry-level first-time home buyer are $800,000 to begin with. And the only reason why they're $800,000 to begin with is because the government continues to subsidize real estate and home ownership. And this, the problem is what you should be doing is cutting the cord and letting this thing cleanse and letting prices get down to levels of affordability. But instead, the alternative is let's create some stimulus. Looks good, it sells the votes, and the average person doesn't really have a strong financial literacy. They just assume that this is going to be good for them and it's going to help them enter the housing market. But what it ultimately does is just going to inflate the values of real estate. It's a really smart, maybe political move, but very, very stupid economically. Other than also Trudeau also mentioned that he would bring in a 1% vacancy tax on non-residents and non-citizens nationally. So somewhere, Carol James of the BC NDP is smiling down, that Justin Trudeau is essentially signaling or reaffirming that the BC government's speculation tax is a complete blessing. So what I'll do here, not to get overly political, but in the next couple weeks, I will put together a housing video. I will outline all of the politicians' proposed housing policies, and that way when you go into the elections here in October, you'll be fully aware and informed of the policies that are being proposed and what their potential impacts on the housing market will be. So I'll put that video together and we'll sort of get into more details around the politics and policies around housing. But this ultimately just brings this video back in, just to sort of wrap it up, is this whole thesis that we're sort of reaching this point, as William White talked about. We're basically in this debt trap, and we're going to go further and further into negative territory. We have the IMF, which has already discussed and proposed that interest rates can, in the next recession, and should be taken down into ranges of -5%. So interest rates should be -5%. And then, they've also proposed, banning cash transactions. That way you're actually able to enforce those negative interest rates on people. So that way people will basically be forced to spend money, because if you're being charged 5% to hold cash in a bank, what do? And if you have a cashless society, that means you then can't withdraw the cash and just simply stuff it under a mattress. So you can see where these central bankers are going. It's totally lunatic and psychotic, but this is why I've had this thesis on real assets, on gold. We've seen gold ripping, and more recently, after once previously being bearish on it, I am now going to dabble ever so slightly into the Bitcoin world. I've had a lot of people that I respect recently have also changed their political or their leanings on that. I've seen Raoul Paul come out, Jared Dillian come out, Dan Tapiero on Real Vision did a good piece on that. He was also super bearish on Bitcoin before, but again, has recently switched their thesis and saying, well, listen, if this is the path that we are going down, maybe it does make some sense to hold at least some small fraction of this as basically a call option on a new monetary and financial environment. And it's also why moving forward here, I will be launching a real estate investment portal, basically on multifamily apartment buildings in Canada, and potentially down the road we'll veer into the US. But I'm a huge bullish proponent on multifamily real estate, where you can get economies of scale and collect rent checks, basically leveraging this cheap money that is out there. But there's obviously ways to do it. So I'm going to be partnering with some guys here locally in the development space, and we're going to be looking at those opportunities moving forward. Because at the end of the day, this channel is about financial literacy. It is about basically protecting, and not only that, but creating wealth and helping people essentially navigate that. So hopefully this video continues to provide some insights to you. Hope this helped. Otherwise, see you next week.